Mutual funds can be a great way to build wealth. Today, I'm going to show you several examples of exactly what they are, break down everything that you need to know in easy terms, and show you how to buy them. So of course, you're going to need an account to actually buy mutual funds in. So pick any broker that you like. If you already have one, great. Some common ones might be Fidelity, Charles Schwab, Robinhood. Pick whatever you like. They're all going to have the features that you need to get started. So a mutual fund is really easy to understand. It is just a basket of stocks. So instead of buying stocks one by one, you can buy one mutual fund, and within that mutual fund, there could be hundreds and hundreds of individual companies. And when you buy that mutual fund, a little sliver of each dollar that you put in goes towards each of those companies. They divide this all up. They take care of all of this for you, right? You don't have to do any of this. That's the whole point, is that it's easy to manage. You can buy one thing, set it and forget it. You don't have to worry about it. So let's take a look at a couple of examples. So there are mutual funds for pretty much any sector that you might want to invest in. There's other ones that you can use if you have an idea of when you might retire. There are things called target date funds. All you have to do for those is pick the one that most closely aligns to your retirement year. So we'll take a look at one of those and a few others here. So I'm logged into Fidelity, and one of their S&P 500 mutual funds is called the Fidelity 500 Index Fund. S&P 500 is just America's 500 biggest companies all rolled into one. Here's the top 10 holdings for this mutual fund. NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, which is Google, different classes it looks like, Tesla, and Berkshire. These 10 holdings account for a third of the total holdings. So there's a whole bunch of other ones behind this too. And again, the whole point is to minimize risk. Spread your risk across all of these companies. So if one of them has a bad year or a bad quarter, it's not a big deal. Hopefully some of the other ones are performing and helping you out. So then if we scroll back up top, we can see the performance, average annual returns as of a few days ago. Looks like the end of the quarter. So in the last year, it's made 16%, the average for 3, 5, and 10 years. So over 10 years on average, it's returned 14.59%, which is an excellent return. A mutual fund like this one that tracks the S&P 500 is going to be one of the most common mutual funds out there. The next one we have is VNQ, which is the Vanguard Real Estate Index Fund ETF. So this one is actually a little bit different. This one's an ETF. A mutual fund and an ETF are almost identical. I guess the easiest way to distinguish between the two is an ETF can be purchased live on the stock exchanges, whereas a mutual fund settles at the end of the day. So if you were to buy a mutual fund, you wouldn't actually have ownership until after everything closes after market today. So this one, you can see the top 10 holdings here. This one, over half are contained in the top 10. And there's 159 in total. So it looks like the top holding in this one is actually a different Vanguard real estate portfolio and a handful of others. This one is EasyU, which is just a European variant essentially. This is a US based fund, but the businesses that they're invested in are in Europe. And you can see some of the top 10 holdings here again. So this one, top 10 holdings are 26% of the total, and there's 227 companies in total that they have these invested in. So if you're a person that just really isn't interested in learning too much about investing, a target date fund could be a good pick for you. So what these are is they are funds that automatically invest based on your projected retirement dates. So let's take a look at this Fidelity Freedom Fund 2060. So this means that if you're going to retire in 2060, this would probably be a good option. As it gets towards 2060, it's going to rebalance the portfolio to things that are more conservative, more aligned with when you're closer to retirement. What worked for me over time is doing the same thing every 2 weeks. Every time I got paid, I invested some money over and over and over again. And over time, that's accumulated into a great little nest egg for myself. So that could be a really good strategy for you. These target date funds are essentially just a one-pick strategy. So this one is in U.S. stocks. Equities is just another word for stocks. Non-U.S. equities, so just foreign stocks, foreign companies. Bonds are debt, so those are usually considered a little bit more conservative. You can drill down and you can see some of the other things that these are in, which is just a bunch of other mutual funds, which over the long term, I think are your best bet. A couple quick notes on things you'll want to watch out for when you're buying mutual funds. The top thing you'll probably want to pay attention to is the expense ratio. So they all charge a fee for you to buy these funds. So that fee is used to manage the fund. So an index fund will not be managed. It's automatically allocated. There's nobody behind the wheel. It's just tracking the top 500 companies weighted by how big they are. An actively managed fund means that there is somebody managing it, and the fees for that are usually much higher, and believe it or not, results usually poorer. So back to our first example of FXAIX, the 500 index fund. If we scroll down, we can see the expense ratio here is only 0.015 of 1%, so it's very, very low. Sometimes you can see actively managed funds 1, 2, 3%. Make sure you stay away from that. It's never worth it. Gross expense 0.013 here, very similar again, very low. And 0.5% on the Eurozone. So that's actually a little bit higher. So let's get into the fun stuff and make a buy. It's really easy. It's just as easy as buying anything like on Amazon, for example. So your platform, of course, might look a little bit different. And if you're making your first one, you won't have any of these listed. These are some of the things that I'm invested in. These are not recommendations. I'm not an advisor. I'm not credentialed in any way. These are just some of the things that I'm invested in. So let's just use FXAIX like we did in the example. It's going to give you a quote. It's going to tell you what the price is, and don't worry about the price. So if you see this and you're like, oh my gosh, I don't have $230 to invest right now, that's okay. The good news is you can buy a very small piece of this, and in fact, that's what we're going to do today. So in your app or whatever website you're using, just click the buy button. And you can see here, you'll have to select account. If you only have one, I would assume it'll default to that, but otherwise just pick the one that you need. I am going to look into my brokerage account, and I have a whopping $7 available to trade. Again, everything's already invested. I want to buy $5. You'll see it says this trade will be completed at the next available price. Again, that's because pricing isn't live for mutual funds. For ETFs, they are. Those are traded live. But mutual funds are settled after business close or after market close. It just confirms, okay, the account that you want. Here's what you're buying. Here's the description of what you're buying, the action, and how much. Trade type, of course, is cash. What else are you going to buy these with? Place order. And congratulations, you've just bought your first mutual fund. So it's that easy, guys. You just bought stock. You are now officially owner in 500 companies just from investing that $5. So it's just that easy. There's no reason anymore to not invest in yourself. So if you've been putting this off, please start now. So I'm 42 and I've been investing for a really long time. And if there's a piece of advice that I can give you, it's that you invest in yourself as early as you can and as often as you can. Don't put this off. If this is something that you've been thinking about doing, I just showed you how easy this is. There's nothing to it. Be disciplined. And every time you get paid or every time you come into some money, put some away from yourself. I hope this was easy for you to follow along. If you could, please leave a like. It really helps the channel. If you have any questions, please leave a comment. I'd be more than happy to help you. Hope to see you again.